Okay, so in the previous demo video, we did show you how to build a credit decision tree. So this is basically as good as being able to build credit rules without having to be a coder or a developer yourself, right? As long as you got the financial acumen. So now we're gonna submit an actual credit application, right? And the credit application is gonna fully follow the rules of this credit decision tree. So I remember back in high school, I think it was 10th grade, we had computer science or computer studies as a subject. And our teacher at the time used to say that, you know, if you code something correctly, you're basically the god of what you're coding. So in other words, the code is gonna do exactly what you tell it to do. The same rule applies to the credit decision tree. It's gonna follow exactly what you do, right? So I'm gonna create a fictitious company. I'm gonna just call it Blueberries. Okay, that just came to mind. I'm gonna make up EIN tax number. I'm gonna assume that this company is based in the United States. For now, by default, we have the tech sector as the ideal sector. And hypothetically, this company is gonna apply for a loan of $500,000, right? So now, you'll see that this process flow is gonna fully follow the credit decision tree. So the first question it asks is if the client's AML compliant. So for the sake of this exercise, I'm gonna say yes. Next up is gonna ask for the debt levels, right? So I'll assume that the client currently has debt of like $20,000. I'll assume that the equity level is quite healthy. So I'll say the equity level is like $300,000. In other words, the business's assets minus its liability is equal to $300,000. And EBITDA is earnings before interest, tax, depreciation, and amortization. So I'm going to assume that the business's EBITDA is $70,000, right? So because of the information input and because of the decision tree, it's going to calculate the debt to equity and debt to EBITDA. So now let's submit and let's see what result pulls out. So this uses AI to generate the full credit report. So it's gonna give a credit decision and it's gonna give reasoning. So here we go. So the credit request has been approved. So let's look at the credit decision. It says Blueberries, a technology sector company based in the United States, has submitted a credit application of $500,000 and based on the financial information provided in compliance regulation, the recommendation is for approval, right? So it gives reasoning. So the debt to equity ratio, it's 0.0667 because we built the credit decision tree such that the debt to equity ratio shouldn't exceed 3.0. So that is within the acceptable threshold, right? We do see here under EBITDA that, debt to EBITDA ratio is also acceptable. And it also highlights some of the risk factors, right? As one of the risk factors, the technology sector is quite volatile, and it also highlights the liquidity risk, right? Although the current debt levels are manageable, any unforeseen expenses could pressure cash flow, highlighting the need for strong liquidity, right? And it also gives recommendation. It recommends the business to keep on maintaining low debt levels, strong EBITDA management, and also to diversify its revenue streams so it continues to generate good enough cash flow. So here we go.